Good evening, everybody. Good evening. Big warm welcome. Thank you for joining me. My name is Adam from Trade with Precision, and tonight's topic is the crypto market cycle. Is it time to be greedy? First of all, actually, before we proceed, can I do a sound check? Just make sure that you can hear me. If you can, please just give me some feedback, type into the questions box, and let me know if you can hear me. That way, at least I know it looks good on my side. Green lights across the board. You should be able to see the slide deck in front of you and hear my voice ideally. So there's a risk disclaimer. There's just the one, and while I give you a moment to work your way through that, I'll also give you some background behind myself. Thank you. Good evening. Thank you, Claudio. Appreciate it. So I am based in the UK. I'm in just outside London, and yep, I'm trade for a living. That's what I do. My income comes from trading, but it's not a very long process. Maybe an hour or so a day. Gives me quite a bit of free time, and of course I get a bit of cabin fever, so it's quite nice to do webinars and engage with other human beings. What else? I'm a technical trader, meaning that my decisions to take trades are based off what I see on the charts, price action, and that's kind of relevant to tonight's topics. Also, I'm a trend-based trader, and that's it. So trading with trend, multiple time frames, both day trading and end of day trading. I tend these days to do predominantly day trading for my day-to-day stuff, and then my portfolio, stocks portfolio, is just end of day trading, weekly charts and daily charts. Okay, so let's kind of kick off on the agenda for this evening. On the agenda for this evening, we're going to have a look at chart analysis, obviously for favorite assets such as Bitcoin, Ethereum, Cardano. There's a few of the others. If there's one specifically aside from Bitcoin and Ethereum that you really want me to have a look at, just let me know. Ripple, for example, just let me know, I'll do that. And we're going to have a look at some price movements for the crypto market across multiple time frames. So that's the daily, the weekly, and the monthly. Kind of get a sense of where the markets are now, and also what kind of opportunities day traders as well as investors will have. And then finally, identifying crucial support and resistance levels for crypto markets. So let's go across to the platform. Now, you are lucky because, well, if you care about this, I've got both platforms open, so we can do whichever platform you want. But usually it turns out when I do a quick survey that most attendees, usually 90% of attendees, are using the MT5 platform. So I'm going to use the MT5 platform if that works for you. Let's go, in that case, let's go and kick off. So there's a couple of things we need to do. So first of all, and bear with me, I'll try and keep it short. So if you've attended these with me before, I usually do a bit of a global market kind of awareness of what's going on in the markets because it's tied to cryptos. I will do that today, but I'm going to keep it quick. I want to spend a bit more time on the individual cryptos and we can take it from there. But what I do very quickly need to do, as much as most people don't appreciate this, is just talk about the difference between trading versus investing. Okay, so the reason is because when we go through the markets now, I'm going to be talking about the differences between trading opportunities versus investing opportunities. And if you're new to this, so this isn't, I'm not meaning to offend anyone who's very experienced. This is really just that if you're new to it, you're going to see it potentially, you'll not be aware of that. So let's talk about investing first. Okay, so just imagine that we are looking at I was going to say looking at a stock, but I think we could talk about we're looking at a particular crypto. So we can see the daily chart is kind of going up and down, and then we can see ultimately, at some point we see the crypto chart heading to the upside. It could be a stock as well. It doesn't have to be that. What it really should be ultimately here is that we're looking at some sort of asset that we would be looking to put our money in. So just quickly, what is investing? And I'm going to oversimplify this, so bear with me, oversimplify it. But essentially, investing is a passive activity. By that, what I mean is we are not investing to earn an income for the most part, or at least not at this stage, maybe down the line or on a pension or through dividends. But for the most part, investing is what do we do when we have spare cash? We've got some extra cash, spare cash. What do I do with it? It's burning a hole in my pocket. Depending on how much it is, I can put it into a high interest bearing account at the bank. I can put it into a property, for example, maybe buy an apartment and rent the apartment out, or just buy a property and invest in that. I could buy gold, I could buy silver, I could buy commodities, I could put it into stocks, and I could put it into cryptos. And so first of all, it's about having spare cash. It's usually, this is generally it. We've got some extra cash where we just want to make sure that it's earning more than it would in a high interest bearing, just that it would earn more than if we were putting it in a bank account. And so what that really does, first of all, is that actually eliminates certain markets. When we're investing, we ultimately need the market to go up. So there's a direction we need the market to go up. It has to go up. It has to go up in value over time. And if we're investing, for example, we're going to be riding out the good times when the market goes up, the bad times when it goes down, the good times when it goes up. And then the idea is that hopefully over a long enough period of time, it's going to go up in value. So we need it to go up in value. And that eliminates markets, possibly such as seasonal commodities, and also is going to eliminate currencies, because currencies, they're just not known as a good investment vehicle, possibly as a hedge, but not as an investment vehicle. The simple things work really well. Okay, so and the other reason we want to talk about why trading versus investing is important, specifically with regard to cryptos, before we go through to have a look at the markets, is that it's a timeline. There's a different timeline, there's a different expectation. Our behavior is different. Our entry criteria, exit criteria, holding periods are all different from trading. So usually we have a bit of spare cash. We're looking to put it into the markets. We're not necessarily going to wait 6 months or a year in the way that Warren Buffett would for that exact right price. We're usually just going to throw it into the market, because our logic is, well, I just want it to get going. I'm going to leave it there. It's long term, and so usually we'll just throw it into the market at whatever the current price is. And again, as we said, the idea is that over a long enough period of time, it's going to just stay there. So our entry price is not necessarily that specific. Secondly, obviously, as I've said, we need it to go up in value. So we're usually going to be doing ownership. We're going to be buying as opposed to selling. This is for most investment activities. And the next thing is, as I said, we're going to have to be holding it over a period of time. So the logic goes that if we don't need the money right now, then we could just leave it in there to continue to grow. Okay, cool. Thanks for I'm monitoring your questions as well, so I'll get to that in a moment. So the point is, as long as I don't really need the spare cash, I can just leave it in there. As long as it's growing, I'm happy. So again, this is a generalization, but that is often the case. There's no real reason to sell unless we need to. So an example might be, maybe I sell my house and I want to go traveling the world for a year. So I'm going to put that money into the stock market, and then when I come back after a year, I'm going to take it out. Maybe that's why I would do it, but otherwise, I might just leave it kind of in there. And so the exit point is also very often open-ended. It's not really a fixed exit point, and usually it's just time-based, and we've got a longer period of time. I might even add to it over time as well. So no real exit point, no real entry price specific, and we've generally got a direction we want to be going up in. Okay, so that's kind of largely describes that. Let's go through to have a look at the difference when we start looking at trading. So trading is a big thing. This is where we are looking to earn an income, a secondary or primary source of income every single month, guys. Every single month we need to be cashing out, getting paid for what we're doing. So there's a certain amount of pressure to yield profits at the end of every month. You don't necessarily have to close out all your positions, but you do have to close out enough positions to effectively kind of take a bit of a paycheck or withdraw a paycheck. Okay, so that changes the game, because it means that I'm only concerned with what is the market doing today and this week. That's all I care about. What is the market doing today? What is it doing this week? Why? Because, well, by the end of the week, I better be up, and if I'm not up this week, I better be up next week. So we tend to be kind of breaking down into like today, next few hours, next few days, and then we'll start again next week. Empty bucket, start again. So here's the next thing, is that when we're trading, we are incredibly focused on our entry price. Our entry price, for example, if it's an uptrend, I might be looking for a nice little bullish candlestick here, like a nice little hammer or something like that, and looking to put my entry precisely 1 pip plus the spread above the high, stop loss 1 pip plus the spread below the low, and looking to take profits at 1 to 1, 2 to 1, and 3 to 1. And that's an example of a strategy, a 3 to 1 strategy with a 60% win rate, and I'm taking profits at 1 to 1, and then I'm trailing my stop loss. That's a very fixed approach to siphoning profits out of the market. So we'll have 60 winning trades, 40 losing trades, but our winning trades are 3 to 1 on average, losing trades 1% down. and so on. So the goal is to have a way of engaging in the markets on a frequent basis and extracting profits from that. So it's more aggressive, slightly more stressful, and we have to be doing it on a daily basis most likely. So, but our entry is precise, very specific stop loss, very specific entry, and usually a very specific exit process. So that's quite different from investing. And usually because this is what's really interesting. If you think about it like this, is that if you're investing, the smaller term day-to-day fluctuations, what happens over the next hour, is not relevant to an investor. The investor's thinking long-term, big picture. They're not thinking about, well, I don't really care what Apple does for the next 60 minutes. It doesn't matter. I'm thinking big picture. So this is important because the big picture is not really concerned about the day-to-day fluctuations. And as a day trader, it's the exact opposite. You are only focused on the day-to-day fluctuations and you are not worried about the big picture. I need to repeat that because it's a different hat. You've got a different mindset. As a day trader, you are not worried about the bigger picture. You are exclusively only concerned with the day-to-day fluctuations. Okay, that means that if the trend is going up, we're looking, and this is relevant to cryptos. This is all going to be, you'll see why it all applies to cryptos. But if next week cryptos are going down, I might be looking for shorting opportunities. Might even during the day, I might be shorting in the morning and buying in the afternoon, depending on the time frame I'm trading. Okay. So those are crucial. I've got a fixed exit. My timeline is different. My paycheck, my purpose is different. My selection criteria is different. I can buy and sell, make money both ways. Okay, so if you're new to this, that's really important because no one ever tells you that you need to wear a different hat and think differently, and it changes the game. All right, cool. I think you're with me so far. So the next thing we need to do, just as a summary, just as an overview when we get to cryptos, is please understand the most healthy way to look at cryptos. Right now, they're early stages of digital currencies. Digital currencies as a concept makes sense. Our money is largely digital, even though we have cash versions at the moment. Banks are very quick to make it digital, so even if they say they aren't. But at the same time, there's always been a desire to not let the governments and the banks control all our money. It's crazy when you think about it. It's your money, and yet it's kind of not. So this growing dissatisfaction led to, and international global trade, buying stuff on Amazon, buying stuff online, has led to a logical conclusion evolutionary wise. Why don't we have online currencies? And as soon as that idea occurred, lots of different currencies have come about, and they're not all the same. Ethereum is really powerful because it's got an application section as well, and they're built on the idea of security. So they've already improved security worldwide in terms of blockchain technology. So I'm just introducing the idea of why we need to think about them as a digital commodity. Gold, for example, we can't eat gold. You and I cannot eat gold, we can't eat silver, but it's been for 10, 11, 12,000 years. It's been used as a currency like bronze. We've been using it to replace, selling eggs and milk and wheat directly. We replace it with cash, so then we can assign a cash value to something. And we've been using coins, and so the whole idea was that you could physically hold a piece of gold. You can also go mine for gold. So if you want to go find gold in the mountains, you can go do that. And if you have your big piece of gold and you lose it, it's gone. And when you sell it at the market, if you sold gold today versus a year ago, you'd have a completely different price for the same amount of gold. So it's worth whatever it's available, on the open market. And so it's the same with cryptos. Again, they have value because we use them as a tool. So they are becoming more and more used in lots of countries around the world. But their value is because we give them value, right? And right now it's early stages. We're in the infancy. It's in the first 15 years of cryptos. It's baby. Like, considering gold has been around for thousands of years used by humans, we're in the first 15 years of digital crypto, of digital currencies, and therefore it's volatile. It's like the Wild West. It's the early stages of a gold rush. So it's still figuring out what it is, where it's going to be, and be sure that governments and central banks are not willing to compete beyond a certain degree with these. So ultimately, they want to share the markets, and they realize that there's going to be a number of people that are always going to want access to cryptos, but at the same time, they're definitely not going to necessarily not be threatened by them. So that it's not a conspiracy thing, it's just common business sense, and also making sure that you keep an economy stable. So, okay, so that really, the reason I mention this is because I want you to understand that in the last couple of years, cryptos have started to become noticed by the bigger institutions and have become part of portfolios of people that have, you know, bought enough Apple stock, bought enough Microsoft. Where else can I put my money? And you know, institutions have started saying, well, you know what, we've been looking at cryptos, we'll start letting you know, get involved with Bitcoin and a few other areas. And so you must understand that the correlation between the movements when we have a look at a crypto is very similar, especially over the last year. So I would say that there's a point somewhere where, and I can't exactly mention exact point, but somewhere in this area where it started to become, where cryptos were adopted by institutions and have started to become part and parcel of portfolios for investors. Okay, it's being adopted in other ways. I mean, obviously it's being used more and more in shops and businesses and so on, but just so that you must understand, institutions with lots of money, billions, can start investing in cryptos. And also in addition to that, there's been businesses launches. You know about companies that have launched during the .com era that weren't worth anything, that launched, and people launch them because they can make a lot of money, and then the company doesn't have to perform, or it's not worth anything, and it crashes. So crypto is offering the same types of things. If people are keen on cryptos, then create a crypto like Dogecoin, make it popular, or you know what I mean, where I'm going with this. But in amongst that, let's not throw the baby out with the bathwater. Okay, so now that I've kind of established, I want you to understand that while that a lot of the recent pressure we've seen on cryptos is exactly what we've got happening with certain types of stocks. So let's go look at Netflix. That's a great one. So Netflix, if you look at that from a monthly perspective, we've had a really sharp sell-off on technology stocks. It's been the same for Meta. It's been the same for PayPal. There's quite a few of these. So the reason I bring that up is because people who get into cryptos are convinced somehow that they are special, that they are unique, and that they are not necessarily integrated into other or connected with other asset classes. And they absolutely are. Maybe they won't be in the future, maybe they weren't in the past, but currently they are completely joined at the hips, and money flows between cryptos and stocks and currencies. Money moves between them. And it's also influenced by the dollar. The dollar is the single biggest currency in the world. If the dollar is weak or strong, it's going to influence the price of Bitcoin. Once you kind of get that, you can sort of simplify things. So now that we've done that, let's go and have a look at Bitcoin monthly, and let's look at, oh, geez, okay, let's just clean this up a little bit. I used to have a very nice script, which was clean up all objects, but okay, I'm not really gonna be able to do it this way. So let's just do this and just go through these, just delete. And let's get rid of that. Cool. Have a look at it on a monthly basis. So we just kind of compare the two. They are looking at Bitcoin versus Ethereum. They're very, very similar. And yeah, and they're not that different really when we have a look at some of the recent moves over the last, say, 12 to 18 months of some of the tech stocks. Okay. And so we just need to be somewhat aware of that. There is that difference between the two. And so the long and short story of this is that when money starts to come back into, this is what I want you to, one of the key points I want you to take away from this evening's webinar, is that when money starts to come back into the equities markets, the stock markets, we're going to see it start to come back into cryptos. There might be a bit of a lag, but there is definitely a flow between the two. So you're not going to get cryptos climbing at this point in time if equities aren't climbing. So you need to keep an eye on both. And also means that if equities are climbing, that's optimistic. That's a reason to be optimistic. Optimistic that we're going to see that. Okay, so that being said, we can very quickly look at these markets. Now, this is your choice. I was going to give you like a 4-point bullet list or a 5-point list that will give you confirmation that the markets are, that they are becoming bullish again. But I don't want to bore people. If you've heard me say it before, I don't want to bore you with that. So you let me know if you want me to go through that bullet point list. And in the meantime, I'm going to go across and have a look at these cryptos. So the first one we're going to do is going to be Bitcoin. So you may have, I'm showing my age here a bit, but I grew up with Betamax and VHS, VHS tape recorders. And many people don't know this, but Betamax was a far superior quality tape and machine. Technology was much better, but VHS had a much better marketing plan. And so ultimately they won out. So it's interesting because we've got Bitcoin and Ethereum that I would say are the grandparents of the the ancestors, or at least the kind of, they would be the ground zero for the kind of modern day cryptos. But the truth is, we really don't know if they're going to be here in 20 years or not. But what I would say is that I keep an eye on both of them. We'll know sure enough if anything is going to change from that. So let's quickly do an analysis of Bitcoin. The rules are relatively straightforward. If the higher time frame gives us a really good sense of perspective, you want to go up. The higher you go up the time frame to the weekly and the monthly, the more perspective you get in terms of where we are. Now, what we do have to highlight here is we do have we have a double top, which is a rejection here and a rejection here. I'm only mentioning it because this level is very significant. So that when we finally get back up to that 1 day, we need to be aware of that price. If you're one of those folks that has had money in Bitcoin and has not taken profits here, you've not taken some money out and not taken some money out here, it's definitely worth a while kind of creating a rule for yourself to take some money out. So let's just say that you put 10 grand in and it was 100 grand and you wanted to take out 20. Make sure that you force yourself to take out the 20 here anyway, because we could have another rejection. It could come back down here, carry on. But what I also want to highlight here in general is that we come back to the 50-period moving average. So there's nothing too complicated on what you see on your screen. I've got candlesticks, support resistance levels, which are the foundation of all technicals. Technical analysis is really just the visual representation of fundamental analysis. Fundamental analysts don't get it because they don't think it's the same, but it is the same information just printed into a picture. It's like looking at a company's performance instead of as numbers on a page, but as a graph in a picture, on a chart. Okay, so I'm also using a 10, 20, and 50 period moving averages, just simple, nothing too complicated, and a MACD and RSI, pretty much default settings. Okay, certainly for the MACD and RSI, and these two are not that important. They really just give me a sense of the momentum of the markets. Are the markets bullish or bearish? Are they diverging or converging? So what does that mean? It means that if the market's trending higher here and these are both trending higher, then we have agreements, which means these are bullish, this is bullish, the trend is healthy. If we see the market is trending higher here, but it's starting to trend lower here, then we have divergence. And that means that the market is becoming exhausted, and therefore we could be in for a consolidation or a change in trend. And you can see there's some really good examples of it here. Here we have a high and we have a higher high, so that goes up there. And at the same time we have a lower high. It's just a really great example of it during those two periods. When we go from that high to say that high, we can see there's a distinct difference. And so we call this bearish divergence. And we then wait for price to react. We saw a second rejection. Break from that, and then we came back down, at least back down to here. So the next thing I want to say, and this is more of a kind of a cautionary note for somebody I follow on Twitter, goes through these phases of retweeting a lot of other website stuff about Bitcoin, but it's like once a month, and then I just suddenly get like 25 retweets of other content in my Twitter feed. And it's all about how Bitcoin is about to start the biggest bull run it's ever had, blah, blah, blah. And that's bollocks. You cannot predict you can't predict that when the price gets to this level, it's absolutely going to go up there. Nobody can predict that. That's not what technical traders do. What we can do is say, this is a significant level. That is a significant level. Then when price gets there and we see how it reacts, then we can say the most likely thing, if we see a strong bullish candle here, then we can say, well, the most likely scenario in this case is that it's going to head up to this level. So technical traders are really looking for, it might be on the monthly charts, it might take a couple of months to unfold, but generally we're looking at a move from one level to the next. So we're looking at a most likely move between two price levels. And that's something we can predict with a very high degree of probability, but it's always based off the signal that the market gives us. Is there a bullish or a bearish reaction? Okay, if the market follows through, then it's most likely going to head down to these levels. And we can do that with a degree, depending on experience and skill, with somewhere between a 65 and 90% probability of accuracy. And so that's what we're doing. For example, if we're looking at a beautiful uptrend, right? We see the uptrend is made up of a series of higher lows and higher highs. we see price coming back here. Maybe it's coming back to the support resistance level. Maybe it's coming back to a fib level as well. Maybe it's coming back into the moving averages, and we notice that every time it comes back to the moving averages, it hits out. So now we've got an uptrend. We've got price breaking and retesting this level. We've got a fib level, a support resistance level, and a moving average. We've got a whole string of what we call confluences. All we would do as technical traders say is that there is, if nothing else changes, if all else remains equal, there is a high probability, especially if we then get a very nice little bullish candle here, there is a high probability that the market will do another leg up. So let me just emphasize that as a trader, and this could be on a monthly time frame. So it could be something that you predict that will likely unfold over 12 months or 18 months, because it translates to higher time frames and shorter time frames. Could do it on the 1 minute as well. All we are saying is this behavior that we've seen, this repeatable cyclical behavior, plus all of this confluence, plus the signal of the bullish candle, all of that implies that there is a high probability that the market is going to do one more move. So I'm emphasizing this because I want you to understand that as technical traders, we're not predicting what's going to happen here. We're saying, based on all of the evidence I can see here, this is likely to do the next leg. And that's all we're basing, that's all we're doing. It's very important for the newer traders who are sitting here tonight to understand all we can do. If I'm bouncing a ball or we're throwing a ball through the hoop and we're doing it repeatedly, and then I launch the ball at the hoop, you've seen me do it the last 10 times. You know what's likely going to happen. It's not guaranteed, but it's very likely. And especially if I'm halfway decent at throwing the ball through the hoop, from Michael Jordan, you know it's probably going to go through the hoop. But where it's going to be, 10 minutes from now, you can't predict. So all we're doing is with a high degree of probability is that the immediate next move of the market is most likely going to be such and such. That's what trading is. And it's also, I guess, arguably what investing is if this is the performance, the pedigree of something, if these are the stats around this company, then we're likely to see it do that. Okay. So, because remember that for the newer people, I've got to brain dump a whole lot of backstory plus technical experience plus wisdom. And then for anyone who's intermediate, you have to bear with me when we do this. So what is the current trend right now? The current trend for the monthly is a downtrend. It's got a high, which goes to a low, which comes up to a lower high, which goes down to another low. So we've got a downtrend in place. So this trend does not change until we get a higher low and a higher high. So we need a higher low and a higher high to get that. And actually, this level is going to be significant because we really only become very bullish effectively once we kind of get back past that on a much longer term time frame. So when we start to break above this, that's quite important. The next thing we can say with a high degree of certainty is that we've come back into these old highs. We've come back down to the 50-period moving average in the past. This is where we are now. This is where we are now. We produced a green candle, bullish candle, and I just wanted you to see that often when price comes back, we see a nice little bullish candle, and then market takes off, comes back, we get a nice little bullish candle, the market attempts to go off. In this case, it didn't, but throughout here, it's often done that. And so this is something that we can have a look at. We produced a bullish candle here. We could well see the markets, we could potentially see them go up from here. What I would say though is that if the markets are going to drop lower from here, they haven't got a lot further to fall. What I mean is we're approaching the lows, and without a doubt, we should always see market crashes as fire sales. It always seems to be doom and gloom, but we're viewing it the wrong way. We need to reframe it this. And I'll take this. This is from Warren Buffett. It's from Peter Lynch. It's from all the best investors that I know of historically. We should never sell unless we absolutely need the money. We should never sell. We should either buy or hold, but never sell. Okay, because the markets will almost always recover. If you truly believe that cryptos are here to stay, which common sense dictates that we are becoming more and more logical, technological. You're going to drive your Tesla to the garage and recharge and pay for it on Bitcoin because all of that can be done electronically. It makes sense to do it. It makes sense that digital currencies are here to stay. They're just kind of, they're doing a bit of teething pains, if anything else. So as an investor, let's talk about the difference between as an investor versus a trader. As an investor, the cheaper something is, if you in principle believe that it's going to be adopted and has value, the cheaper it is, the the more attractive it is as a buying value, which means that the further down this heads down, okay, the more attractive it is to me. I've been buying when I've had, you know, $500 spare cash. It's just been accumulating both Ethereum and Bitcoin. Now, I'm definitely cannot, and I don't think anyone can tell you, you know, out of say Bitcoin and Ethereum, all the others, which ones are going to be here or where they'll be in 10 years time. So I've been just distributing my purchases between them. Now let me ask you this. You tell me, all right, if we look at cryptos versus traditional stocks, of the two, which one could be labeled higher risk, higher return? So just imagine I'm including all the stocks in the world versus all the cryptos. Which one would you consider higher risk, higher return? Cryptos or stocks? Yeah, cryptos. So here's the thing. This is general common sense when it comes to investing. A smaller portion of our free cash should go into higher risk, higher return. Generally, the majority of it should go into more stable stuff. So in other words, if you had $1 million and your partner wanted to buy a house, and it was, I don't know, 800,000. You wouldn't, you know, what you could do, which is really sensible, would be buy the house 800,000. For example, put 800,000 into that if you wanted, and put the other 200,000 into something a little bit more risky, because if you lose that, you're fine. What wouldn't really make sense to say, you know what, I'm not going to buy the house now. I'm going to put all this 1 million on red, bet it on red or bet it on black, and then, you know, and bet it all on cryptos because it's going to make me so much. That kind of is a little bit on the crazy side. So as a general rule, we would want to put the majority of our cash into safer, stable stuff that's also going to get growth, medium risk, medium returns, but not high risk, high returns. So that's my approach here. If I have spare cash, it's going into this, because if in 10 years time it's gone nowhere, I'm not out of pocket. It's like money. I'm like, okay, well, fine. But if it comes my way, it's going to definitely be worth it. And a lot of people are in pain now because they've gone all in on this. And it's not really their fault because it's the Wild West and they haven't been doing it for a while. They got caught up in it. Okay. So as an investor, this is very attractive, but it's not in an uptrend yet. So you need, like, you're really good when you have an uptrend. You know, when you've got a low and a high and a higher low, and then you come up here, you break that, you've got your uptrend there, and we come back, we're still in an uptrend when we pull here, and we produce our last high here. We produce a slightly higher low at this point, but then a lower high, which is a warning sign, but it's only a warning sign. It's only when we break below that and break below that, we've got a confirmation at that point that the market is going to head further down. That's what it really tells us. It doesn't tell me that, oh no, Bitcoin or Ethereum are bad investments. It doesn't tell me that. It just means it's going to go further down than I expected. And we're still potentially here. If this reaction, when price got up here and got up here, it comes up and you get a lot of wick rejections, bearish candles, and you break the low. If we get that when price comes up here, if we get that here, a lot of wick rejections of candles, that's not necessarily a great sign. If we suddenly get a big red body that heads away from here like a momentum candle, the implication is the market's coming back down here. It's not a guarantee it's coming back down here or down here. It just means we're still stuck in this area, this price range. On the other hand, should we get a nice green bar over here that's followed by another green bar, then we should be safely above this level and probably on our way back up here. You can see there's really 3 core levels here. We've got there. Let's try that again, Adam. There's a level, there's a level, there's a level, and we're kind of here right now. And so, yeah, there's a possibility we can turn around. We're going to go have a look at that. We can see what's going to happen a bit further down. We've also got a bit of a level old here. We've also got other levels down here. What these levels really are, ladies and gentlemen, is nothing to really stress about, because the logic is either you're in this for the long run and therefore you're going to leave it for a year, 6 months to 18 months. Not predict. I mean, we just lost the last 2 and a bit years to the coronavirus and all that kind of thing. I mean, what's another 18 months to do this stuff if we have to do it? And besides, then it might be worthwhile. So actually now is a better time to start putting, it's counterintuitive start putting spare cash and whatnot into it from an investing perspective. But always spare cash. It's always, obviously, this is not financial advice. You need to see what works for you on that. But if we're going to look at it from a weekly perspective, we still have a downtrend. Okay, so I just want to confirm this. From here, we've still got a lower high. There's a lower low. We've got another low and a lower high. So really, until we break above here, we are still in a downtrend. We're still selling. What it should do is do a lower low. It should, if the downtrend is going to continue. Let's say it gets here and it produces a bullish candle. So what do I mean when I say bullish candles versus bearish candles? This is a bullish shaped candle, but it's not a super strong one because it's a bit red. This is a bearish shaped candle, but it's also not a strong bearish one because it's a bit green. This is a nice bearish candle. Okay, this is a nice bearish candle. Once they close near the lows, are very nice bearish candles. This is obviously a heavily bearish candle in terms of its shape. This is a very nice, these are nice bullish candles closing near the highs, nice full-bodied green ones. But also you get ones like that. That's a nice bullish candle. It's got a nice little wick. It's got a lot of push and pressure up to it. The context, it's not just the candle shape, it's where it is in the sequence. If I get one of these candles, sorry, one of these bullish candles, but I find it over here in this area, that's a fantastic buying signal for me. But if you get it near the top of a move up here, it usually means exhaustion, but it's context. But you don't get that happening very often. And here's an example of those wicks. Remember I said to you, if you see wicks reacting around a level, these are strong clues, not to say the price can't ultimately break through, but usually if you get a momentum candle, so you get this candle that pushes away. So here they're trying, failing, trying, failing, trying, failing, trying, failing, and then you get another one here that then closes away from this area. See, these are all closing in this area, closing, closing, closing. This one then closes away. It's usually an indication it's going to head off. In the same way, you've got all these nice little wicks here that form a beautiful level of support. You could argue the support's there, and you get a nice little bullish candle here, and then you get your momentum candle. So where you had a whole lot of wicks all over here, suddenly you get that takeoff, that candle that takes off, and that's usually, most of the time, the indication the market is now taking off. Okay, and that was the one that then took off. And so right now, if I see this, in other words, if I start to see this stuff happening here, multiple wicks, bullish candles starting to form in this area, I can get a double bottom. Guys, a double bottom or multiple bounces off there means it could be forming a base and therefore it's likely to take off. Once it breaks above that, the probabilities that we are now shifting into a change of trend to the upside is very, very high. So let me just have a look at these questions now. I'm going to move to Ethereum because we can carry this on Ethereum. The correlation between the pairs is very, very high. I mean, it's anywhere from 70 to 95%, so it's fine, depending on which ones you look at. So, hi, how much value does the bearish engulfing candle on the 6 months chart from the first half year on the current half year is? We didn't see such a candle. So I'm going to go to the monthly chart. And there was a bearish engulfing candle in the first half year on the current half year. That's a bearish inside candle. Am I looking at the right chart? Okay. So again, you don't. Bearish engulfing and bullish engulfing are relevant. Where they are also makes sense. If you get a bullish engulfing one here, that's a great sign. If you get a bullish engulfing one near that, you're far away from the moving averages. It's not as significant. So context is also very, very important. One last thing I want to talk about as well is that with stocks, with everything on a chart, it's often orbiting itself. So please understand the market is organic. It's made up of hundreds of thousands of people doing transactions, different money, different budget, different times, different agendas, buyers and sellers. Some people are selling their crypto, some people are buying it. Some people are selling their houses in a buying market when the property market's going nuts. Some people are buying when the property market's going nuts. So there's always someone usually on the other side. It's not that there's some secret mystical agenda going on. But the thing is that the market doesn't know that's the top. It only knows that this is the top when it comes down and it's about here, and then it looks back and goes, oh, okay, that was the top. It doesn't know this is the bottom until it starts heading away, and then it looks back and it goes, oh, okay, that was the bottom. So you must understand it's like a flock of birds that flying around itself. It's flying around, and it's only when it goes kind of kind of turns around and goes under this perfect value, which the market does not know where the perfect value is when it's in it. It only knows in hindsight. We only know when we pass the point that, oh, okay, that was really kind of the sweet spots, and then kind of, oh, we're overbought here, we're underbought, oversold here. So you must understand that the true value of a market generally, guys, is running right through the middle. So if you kind of just ran a line, if I took this and then took a trend line like this, just drawing it from the origin kind of here and just ran it roughly straight through the entire mass of kind of all price on either side, if we look at the entire history, and put it roughly in this area as a guide, you can see that by this logic, we're kind of undervalued, okay, roughly by about where we are to the upside. In this area, it actually makes a lot of sense to me that we will see the market turn. I think that it might even happen where we are now, but I would say I would be surprised if it went lower than this. If it went, I would just see that if it went before that. And I'm looking for a change of direction here. Now, I can't wait for the monthly to go into an uptrend, but I can wait for the weekly. Believe it or not, the weekly going into an uptrend is a lot easier to see. No, don't worry, guys. You never have to apologize for your spelling or anything. As long as you just make sure I understand what you're saying. What I mean is, if you think I'm not paying attention or something, you just tell me, okay? On the 6 months chart. So we are on the monthly chart here. So we do have 6 months. So if you mean on the monthly charts, but 6 months, do you mean like somewhere around 6 months, maybe this one, or anyway, if you can give me a date, if you can give me like, is it somewhere, like, is it December or something, then I can go for it. But don't stress, there's no, I don't want you to feel pressured. So let's go and see. So we'll go through to Ethereum as well. And you can see, look at this reaction here. So we have price coming back up. We're on a monthly time frame. This is a level of support here that's becoming resistance. And we've currently got what I would call at least the first of a wick rejection. Okay, we've also got a level of support and resistance over here as well. And we've also bounced off the 50-period moving average. So just keep that in mind as well. This 50 could potentially be as far as you go. And often that happens with stocks as well, that you get the bounce off the 50. So the reason I mention this to you now is because it's the 29th. So we still have, do we still have 2 more days of, are we 31 days this month? Yeah, we have 2 more days. Could this climb back up here and be less of a bearish candle? Yeah. Could it close down here and be more bearish? Yes. I would say if we get a more bearish close in the next 2 days, I would say the implication is we're coming back down here. On the other hand, should we end as an indecision candle or even a slightly bit of green body, I would say we're probably going to head back up. Let's look at the monthly. That's a little bit of information, but it actually does tell you a lot. The only thing is difference between me and you guys is I have faith in what the candles are telling me because I trust them to a large degree within reason because they've been doing it for a while. So let's go look at that weekly. Okay, so nobody came back to me on whether you wanted me to give you my list on how do we know if we're going back into a bull market. So I'm just going to tell it to you anyway. I'm a little bit offended that nobody cared to ask. I'm just joking, of course. So first of all, when we are above on the weekly, very important, guys, very important. The monthly takes too long, but the weekly is the right amount of time. When we are above the 50-period moving, when we're on this side of the 50-period moving average, we are generally bullish. You'll see how price gets below it, couldn't get through it here, got a little bit over it here, and then headed down here. So we can argue that right now we are bearish, generally still in a bear market. We know this because the monthly is still in a downtrend, but I can't wait for that monthly to go back into an uptrend. So is there an earlier point at which I can have a high degree of confidence that the market is going back into an uptrend? And yes, there is, but it's on the weekly, not the daily, not the monthly, but the weekly. Also, the title of the slide deck is a time to be greedy. And I would say, look, as price heads down into these areas, I think to be fair, without overexposing myself financially, I think it's a good time to start buying into stuff. But if I'm a trader or I want more, like I don't want to put the money into it now, I want to know that it's going to go back up, then we're going to talk about this. So we can say, the first thing we could say is that once we get back over this 50-period moving average, we could say that we are probably now more likely in a return to our bull market. If at the same time, ladies and gentlemen, the stock markets are also above their weekly 50-period moving averages, I would say the probabilities are now even greater. So if we go look at the S&P, the S&P is just below its 50 here, but if that gets back over its 50 and Bitcoin and Ethereum are above their 50, because they're correlated to a large degree, I would say that we can, you know, we could say it's fair. No one can tell us we're lying if we said we're back into, back above the 50 period moving average. So that's one item we need. The next thing we have to do is we need a high, low, high, high. So we need to have a high, a low, a high, a higher low, and we need to come up and break that and have a higher high. So in other words, we have an uptrend. So we need that. That's a second thing we need to have. So we need both things to happen at the same time. It must be a high, low, high, high, and above the 50 period moving average. And usually there's one more thing that I want to see, which is I want to see a previous high broken. So either this one or this one has to be broken. So if the market goes straight up from here, we'll probably get above the 50 period moving average, but I would say we're really not going to be back into the old bullishness until we get back up above that high. It's not the same when you look at the S&P. We have already, ladies and gentlemen, broken the previous high. We've already broken it. We've met one criteria, tick. We almost went above the 50 period moving average. If we now, pay attention, this is really important, if we now produce a bullish candle here and go from here and break this high over here, we will have produced a high, low, high, high. We will also be above the 50 period moving average, and we will have broken this previous high. All of that collectively, each of those are significant things the market has to do that it cannot do if it is a weak market. And that would then be, for me, especially if I saw the NASDAQ, the Dow, you know, a few other markets do that, I'd be like, okay, we're now on that side of things. So that's what makes that so interesting. So again, I'd like to see that. We've got that possibility. If we break this, things are starting to look up. We're on this side of support. We're starting to create fresh highs. And what happens is, you must understand, there are people who only get into the markets when it's up at all-time highs, because that's when they're like, oh, I'm going to miss out. I better get into the market. So there are some people who only jump in at the top. There are other people who love getting in at the bottom because they see it as cheap and they're thinking long term. And everywhere in between, you've got people, you've got buyers sitting here, here, here. You, any of you that I'm talking to tonight, you could be a buyer situated here. You just don't know it yet. But when the market gets there, which could be 3 months from now, you'd be like, oh, okay, I want to put money in, because you would have seen enough of a recovery that you'll be like comfortable. So each person tends to have they're somewhere on this spectrum where they would be happy to get in. Sometimes you might want to get in here and get in here. I just don't like getting in at the top. That's not my thing. And when we're far away from the moving averages, here are the moving averages. Remember, I spoke to you about how we are orbiting away from, or orbiting around the central price. The moving averages are also good indications. So when you're far away from the moving averages, it's statistically, probabilities wise, the worst time to get in. But it's hard because you never think it's going to come back, but it always does. It always does. So right now we don't have that. We have a downtrend. So actually there is, statistically, based off just what we have, there's a strong likelihood it'll still come down to here. But I'm bringing it up because if we break this high, the game changes. If we break this high, and the stock markets are starting to climb as well, which there is a fair chance it could happen. So let's talk about that. If we look at the monthly here, we currently have a rejection candle. We currently have that rejection candle. But if that closes in 2 days' time, because it doesn't have to go very far, if that closes as an indecision candle, or man, if it just closes up here as a green candle, the picture changes. The picture changes. But if it closes as it is now in 48 hours time or lower, then the probabilities that it's going to come back to this low is definitely on the table. Not that it's going to come down and crash down here. That's crazy. We don't do that. Statistically, it's not a good idea. Look at this. You go back, historically, this just goes up. It might have a dip here and a dip here, but it always goes up more than it goes down. It's very dangerous and very foolish, and far more people have gone broke trying to short the markets than just going with it. Okay. So Okay, so if that happens, then I think we could come back down to these lows, but I'm not going to go so far as to say, oh, we're going to come down here yet. I'd have to see how price reacts at this level. And make no mistake, this is a level of support currently. So therefore, I would expect the market to go to it and maybe bounce. But if we close upwards, if we do not close as a heavily bearish candle, then the fear of a market tanking is not really based, the market's not responding to it. Okay, so if we go back here to Ethereum, we have a look at some of these and we get a sense of what's going on. We've come back and produced a bullish candle. We've broken above the high. We've got the same kind of candle that we have here. Okay, it's the same thing. If we go and have a look at some of these other ones, so now we can compare these. Let's go look at Binance, go through and have a look at that on a weekly basis. Okay, so for me, there's a bit of the 50 period moving and there's not a lot of history here. What would I like to see? Here's a nice little rejection. So see how price comes under, comes back up, rejects it and goes. Nice rejection. Like there's a bounce, here's a rejection, here's a rejection. Here's the bottom of the range. But if we go from here and break up, that's great. We could come up and struggle to get through this. And all of this must be done literally with one eye on what the S&P is doing and one eye on what is happening here. Because they should be by and large doing the same thing. Excuse me. And if we get that, then I'm going to be looking for pullbacks to here and a continuation to here. So I'm dealing with shorter term, but I would always have a trading plan of like, okay, I want to be buying or selling. I'm like buying or selling at key levels, which means if the market comes here and I'm buying here, then I'm looking to sell and take profits here as a trader. Guys, as an investor, I might be looking to buy here and ideally buy here and buy at these key points. Price could even do this. It could come here, come back down, bounce and go through, which means I can buy here and buy here, if that makes sense. And then maybe buy here. And that's the difference. So as traders and as investors, we're often looking for the same entry points. Support resistance levels are really those major buy areas. So currently, and then we'll go down and have a look at them from a lower time frame basis. Okay, so Solarium here also looking very weak, coming near the lows, but it could be a double bottom. And what would be an indication of a double bottom? Probably very strong green candles here with nice little wicks. You could even get two side by side. Could be a good indication it's going to head back up. Okay. So we've got Cardano, it's consolidating, it's going sideways here. It's effectively range bound. And that's it. So this, for example, being practical, if I break out here, I'm generally bullish. If I break below that, I'm generally bearish. But for now, it's range bound. So this is a waiting game. I have to wait until it breaks out one side or the other. Only buying here is only as an investor. Possibly on a much lower time frame, I might be saying, okay, where's my range? Let's go back to my daily. Let's do the range box. Let's do this. Okay, go down to my lower time frames, and I can see kind of in this area that this is generally the bottom of the range. And so yes, I might be able to trade it from up to the top. Look, there's your double top and bearish divergence. Let me just show you this. So we'll take one side and the other side here. And so these are equal tops like that, but you can see here, it's not offering it, but there it's giving a clear picture. So interesting, I would prefer to have seen both of those, but that's a good indication. There's a nice bearish rejection candle, double top, sell here, stop loss above there or above there, and target the other side. And so we could potentially do that here. So for example, we've got a high and a low, so we've got a lower low, but that's going higher and that's going higher. So that's bullish divergence. So that tells me that this is trying to turn around. It's trying to turn around. I would like to see a higher low, possibly in a pullback, and get that one. Why? Because then I've got a confirmed change to an uptrend pullback, look for a buy, and then target to the top. So that's how day traders might approach this. And then when it gets to the top, unless it breaks out, if I get this impact, I should be looking to sell. So please understand that as a trader, you're not trying to, it doesn't really matter what it is that you are trading. It's about what are the charts doing? Is it nice and liquid? Is it giving me clear signals? We've got, we looked at Litecoin. Also a bit range bound here. You can see largely range bound. Let's go to that daily. Yep, you can see it's largely range bound. Okay, it's too much consolidation, it's uncertainty. What this also tells you, the good news is not a lot of selling. Means that it's kind of plateauing at the moment because it's either going to go up or probably go up. There's not a lot of heavy selling. Dogecoin as an example. Yeah, pretty much just not doing very much at this point in time. And again, a break above that starts to become more significant. I can see where that level is, generally speaking. Once I get above that, boom, boom, then that becomes Nutri boom. Boom, boom, that becomes a move up to these highs up here. And then, so let's go back because we've looked at all of that. So we've got Ripple here as well. Let's have a look at Ripple. They're all largely the same. So again, even if I only owned a bit of Ripple or Dogecoin, I still am looking at Bitcoin and Ethereum and at the S&P to get context, guys, to get a bigger picture. It is right now, I'm of the very strong belief that there's no way we'd see cryptos climb without seeing equities climb. That wasn't a thing when cryptos were new and exciting because they weren't being, used or bought or sold by big institutions, so they weren't subject to the whims of those guys. But they were a new thing. So any new market is going to have its own buyers and sellers, but now it's not a new market anymore. It's starting to become a little bit more established. It's being added to the list of different asset classes. So it's very important over the next couple of days that we have a look at these. Let's recap quickly. I'm going to wrap it up. I don't want to keep you too long, but let's have a look at the Dow. Okay, is my monthly picture, bullish candle off the highs. We could legitimately go back up to the highs from there. We could do another leg down. So if you subscribe to the idea that we're only halfway through this and we're going to see a recession and earnings compression, which is very kind of, there's actually objective reasons why it can go either way. But a bearish candle like this implies at least probability of a move back down to here. And then we'll deal with whatever happens then, because it could produce a bullish candle and then go back up from there. So we'll see. On the other hand, as I said, if we close higher, which is what the market is trying to do today, it's in a downtrend. It's trying to produce a bit of a weekly candle. Again, if it produces a weekly candle here and can go up from here, then we are going back into an uptrend and the game changes. So again, what has this done? It didn't really successfully stay above that 50-period moving average. It bounced off it. It did break this high. This could be a higher low. I'm not saying it's going to be. I need to see what's going to happen. If it tanks from here, we know what the rest of the story is. So right now we're caught between the weekly. The monthly is saying one thing. The daily is going down. The monthly is potentially going to go just do a move up, and the weekly is giving mixed signals. So that's why it's a rare moment where you have to wait and see which way it's going to unfold. Okay, so let's go to Bitcoin, or let's go back to Ethereum, for example. So this is what I want to see. If I get this rejection candle closing, then the usual course of action means that in September, I'm looking for a break of this low. I'm looking for shorting opportunities down to here. That's the highest probability move, which means I can go down to the weekly. Okay, so I'm going to look essentially, let's do it the other way around. Let's do this and then we'll, oops. Is the low of my candle. And here's the other low over here. So I know that there might be some opportunities down to here. Go down to my weekly. I can see what the break and the low of that is. Go to my daily. Hopefully this makes sense to you. We are on a downtrend. That looks really nice and bullish. Look at this. How cool does this look? We've got a nice little move, bullish, little indecision candle, inside candle, and a bullish engulfing. It's engulfing this. That looks pretty good. So that looks like the market wants to try to go up, but we are in a downtrend. So how will I know if that's starting to shift? Well, I would say if we start coming up to this level, we're probably going to start to break through. So tomorrow and Wednesday are going to be very interesting, because if we get a nice bullish move, that just alone, if I got a bullish move tomorrow, that already implies that monthly candle is going to be less red, and that we're probably going to see the markets climb just tomorrow, if that had to hypothetically happen. So I could look for that. So tomorrow I could look for, this sounds very odd, a break above this high. If the market breaks below here, remember that if the market breaks below here, I'm looking for moves down there. But if tomorrow it breaks above the high here, it might be targeting there. So I'm taking a day-by-day approach. Go down to that 4 hour. 4 hour has no clear trend. Why does it have no clear trend? It's producing lower highs, low lows. It's broken that, but it hasn't produced a higher low yet. Hasn't done that. And if it goes back below here, then it's still within the downtrend. So not offering a lot there. Let's go to my 1 hour. My 1 hour is in an uptrend. There's a level of, you can see here, look at this level of support resistance as well. There's a little bit of one here. So yeah, the market could come back up and do this over the next, between today and tomorrow. It's a bit late now, but if we come back and by tomorrow we're down here, we're starting to head up and we break above that, that's the daily high, then we're probably going to head higher. On the other hand, should we start to head lower, again, I can start looking, remember that if we break below here, I'm looking for sells. And this is the same approach I could take with Bitcoin or Ethereum as a day trader. So let's go down to my 15 minutes. There's the same information. There's my one level, here's the other level. Okay, so what I'm looking for, I'm not going to do it now, look for it tomorrow, is to start to see some high lows, high highs. That's what I want to see tomorrow. Should price break below here, I'm going to be looking for lower highs, low lows down to this level. And again, if it breaks below here, I'm going to be looking for lower lows down to that level. And that's the approach. So if you're a day trader, that's what you're really doing. You're compartmentalizing your information and identifying your key levels. And then as a general rule, if it breaks below these levels, I can look for those opportunities. And then it's the same information whether I take it on the 5 minutes or the 1 minute. You can see here, look, we've got this big move. I'm going to wrap up in the next minute. So big moves, and then it sort of loses its steam. That's exactly what's kind of happening here. Once we break through this, we could start producing lows if we're going to do that. We'll see. But the one timeline I'd watch is that 1 hour. Why? Because if the 1 hour is going to come back to the moving averages and head off there, if it's going to come back, that's where it's going to turn around. And so might have a short move down to here, but it's really important because once we break above there, I become more and more bullish. If we fall below this, I'm not bullish anymore necessarily. I'm then probably bearish down to this level. And that's the approach. So again, remember that the shorter term fluctuations in the market are not reflective of the bigger picture. Okay, so ladies and gents, I want to say first of all, thank you. Gracias, Danke, thank you for your time. I appreciate it. I'm sorry, Dave, I wanted to answer your question properly, and I'm sorry I wasn't really able to kind of do that. I apologize. But listen, yeah, look, if you have any questions to do with your account, or you need any help with a platform, for example, please get in touch with the lovely folks at icmarkets.com. They're always very, very happy to obviously help you. If you want a copy of this recording, if you want a copy of it, please just email me at adam@trade, because I don't work with this. Just send me an email saying, hi, can I get a copy of the recording? That's all you have to do, nothing fancy. Send me an email to this one, which is tradewithprecision.com. Just send it there, and I'll send you a link tomorrow with a copy of the recording. Okay. But again, yeah, ladies and gents, always a pleasure. I really enjoy it. I think we live in exciting times. I'm very curious to see by the end of this week which way the markets have decided to do. If they've closed up, that's a good sign for September. If they've closed down, it's more bearish for September. Just because they're sitting at that fork in the road. Always a pleasure. Thank you for questions. I want to wish you a wonderful evening. I'm going to end the webinar now, and please go enjoy the rest of the evening with your loved ones and have a good week. Thank you very much.